Hello, everybody. Gbenga Olatunji here. Today, we shall be learning the meaning of audit and assurance services or engagement, which is the chapter 1 of our advanced audit and assurance. Last time we did the overview of the advanced audit and assurance syllabus, and if you were not with us, then please kindly check it up so that you can be in tune with what we will be learning today. Okay, so we are going to be learning today the meaning of assurance, the elements of an assurance engagement, advantages, meaning of audit, advantages of audit, the merit of audit, review work, compilation work, agreed upon procedure, audit-related services generally, and every other thing that we could talk about by way of introducing ourselves as contained in the chapter 1 of our advanced audit syllabus. So, what is assurance? What is assurance? Assurance or assurance engagement, simply put, means to put confidence on something. That is, we are engaged or called upon to render service to ensure that the validity, the credibility of the information is maintained before the end user could utilize it. Don't forget, background of audit is in validation and being objective, being independent. So we are intermediary between people that prepare the financial statements and the end user, like the shareholders and the like, and the management. Okay, so assurance simply means putting confidence on something. So it's a form of comfort too. It means reliance or reliability. Okay, from a note, assurance simply means confidence. That is, practitioner's opinion is to assure that the information can be relied upon and is credible. And let me quickly keep this one in. Any sphere of life can be audited. But we are financial people. And because we are financial people, majority of the time, the subject matter of our discussion or of our services usually surrounds financials, financial statements, and the like. But please don't forget, by going by the history of audits, anything can be audited. Okay. In assurance engagement, a practitioner is engaged by one party, usually the organization's management, and we are to give an opinion on a piece of information which we usually call the subject matter. We are going to get to that stage. And we could have, okay, we are a bit going ahead now of audit, into audit. We could have a statutory audit. We could have a private audit. A statutory audit is one form of assurance engagement. The shareholder of a company do not accept without questioning the information because they were not there. Majority of the time, the shareholders won't be available. It's the executives that run the organization on a daily basis. And before shareholder could rely on it, they want another party, independent party, which is the practitioner, to put reliance on it that the information is okay. Okay, let's move ahead. We will come back to the statutory audit so that we can lay a solid foundation. So when we are talking about assurance, still on assurance, a practitioner does not need to express opinion. Maybe I should come again slowly. I said in assurance services, our opinion, express opinion, majority of the time is not required except for one case, which we are going to get to later. But when we are talking about audits, expression of opinion is mandatory. Okay? So, areas that we can have non-audit or assurance services like corporate social responsibility audit now is in vogue all over the world, in which organizations want to be socially compliant and relevant in the society in which they are located. So we could audit it. So we could give assurance rather to that operations, so that I will not confuse. Don't let's use audit now so that we will know the difference clearly. So when we are engaged to do social responsibility audit, at the onset of the year, the organization must have set a goal that, okay, let's say, oh, we want to go green and we want to plant 1,000 trees. Are we able to achieve it and the like? Why are we not able to achieve it and the like will be the question. And those will be the audit objective to look at and conclude. Okay? We can have environmental policy assurance engagement, employment policy like HR, review of HR handbook, employee handbook, and like. All these and many more will fall under the category of assurance engagement. Assurance engagement have become most significant in the recent year due to increase in the range of information provided by the directors. Just as we know now that corporate organization now majority of the time are having organizations now want to be socially compliant, and as a result they have to prepare assurance report concerning the sphere of life that they've chosen to really relate with. So we come to elements in assurance engagement. Elements in assurance engagement. What are the elements in assurance engagement? That is, when we are talking about assurance services or assurance engagement, what are the things that we are going to feature in that arrangement? Just like we say, okay, we are in a class now, what are the things that are in the class? And those are the elements that we make up that class. Now we'll be talking about the fans, the bulbs, the chairs, lockers, and things like that. Likewise, when we are talking about elements of assurance engagement, we are talking about, okay, what we feature in an arrangement for these services. Okay, so first of all, we usually have people. In anything we do in life, we agree, we will usually have people to work with. So we have parties to assurance engagement. And who are the parties? Well, we have the person that is appointing us or engaging us, usually the management. We will have ourselves, the second party, to do the work, the practitioner. Then we will have the end user of our report. So these three parties will always be present, and they are together one singular element that must feature in an assurance engagement. Okay, so then another element is the subject matter, and the subject matter is usually what we are working on. What we are working on becomes the subject matter. Usually it's going to be financial statements, it could be tax, it could be review of information or data and the like. But what actually brings us together is the subject matter. Okay, then we have another element, which is the suitable criteria. Suitable criteria, it simply means what yardstick are we measuring the organization or the financial statement against. What yardstick or what measurement are we using that we are comparing the standard of the standard of the financial statement against? Like in Nigeria, CAMA stand out. Now CAMA has been reviewed to CAMA 2020. So when we want to audit a financial, every company must align first of all with Company and Allied Matter Act 2020. Okay, then let's say, for example, we want to audit bank. A bank will falls under the central bank of any nation. So we must compare the standard of their financials to the stipulated guideline of the central bank. And we'll be talking about prudential guideline and the like. So depending on the industry in which we are working on or working for, will tell us which criteria is suitable to be used. Then we move on to evidence. Is another element in an assurance engagement. Evidence. And evidence simply means what you want to base your work upon or your conclusion upon. Evidence are the information gathered in the course of our work. And as a professional, everything we do must be documented. As professionals, everything we do must be documented. And that is evidence. So we must have basis for our actions and inactions. Okay. Then last but not the least of the elements is the assurance report. We must be able to write reports, maybe 1 page, 2 pages and the like, to summarize what we've done and the conclusion reached. So those are the elements of the engagement, assurance engagement services. Now let's move on to audit. What is audit? Now that we know what assurance is, the elements in assurance engagement, what is audit? Don't forget our course is advanced audit and assurance. So our audit, simply put, is an independent examination. Now our subject matter is the financial statement. So we will say is the independent examination of the financial statement of an organization with the view of ensuring the truthfulness and the fair presentation of the information therein. So some key words when we are defining audit must not be missing. And the keywords are independence, the independent examination by the independent person, let's say independent auditor or independent firm of chartered accountants. They have a aim of working, and the aim is to express an independent opinion. And the opinion is as to whether the information presented to them is fairly presented and is true. So please, all these keywords we should not forget. Independent examination, independent person or independent firm of chartered accountants, having a view of expressing an independent opinion to the truthfulness and fair presentation of the financial statement presented before them. Okay. ISA, it simply means International Standard on Auditing. ISA 200 states that the purpose of an audit, that is a form of assurance engagement, is to ensure the degree of confidence of intended user in the financial statement. That is, all our aim and the objective of engaging us is to help the end user make a decision that is the best in the circumstance they find themselves, by us putting assurance or reliance or telling them that they could rely on the information and make the best decision possible. Everything that has advantage must have disadvantage. So when we are talking about audit, it has too. And let's quickly look at the objective of audit. The objective of audit. So one of the most primary of the objective of audit is to express an opinion. Expression of independent opinion is the primary purpose auditor will be called upon. Please, let's lay it to heart. Then we have other objectives of audit but are secondary, like prevention of errors, detection of fraud, detection of errors, and the like. These are important too, but they are not the primary purpose of audit engagement. Of course, advantages of audit: it adds credibility to the account. The detection of error: we can easily detect error if audit is being carried on as soon as possible. Professional advice: many clients will neglect this aspect, but it's very important, because when auditors finish their work, there's a report that they give, or reports, and one of it is letter of weakness, as in our syllabus, or practically on the field we call it management control report. So this report is to let the management know that this and these are the things we've observed in your internal control system, and we propose you could improve upon it like this. So we will advise them, and this is an added advantage of engaging an auditor or a practitioner. Of course, some organizations engage auditor so that they can put credibility on their financial statements, so that they can use it to source fund, because majority of the time, if an organization wants to obtain bank loan, audited financials will be required. So it's another advantage. It helps to source out funds for tax assessment too. Majority of the time, when the taxpayer presents to the tax authority their audited financials, they will say tax authority will ask them to go and pay their liability as assessed by the practitioner. But if they do not have audited financial statements, the government will issue what we call BOJ, best of knowledge, and which is just an estimate. Government presumably that this amount should be paid. But audit add that value and put a stop to it, to BOJ, if the taxpayer had audited his or financial statement. So we move on to disadvantages of audits. Of course, payment of fee. Payment of fee. So it doesn't come cheap. There's a fee to be paid, and that could be a disadvantage. It's an expense. It's inconvenience staff in the form that auditor must ask question. It's part of our audit procedure, inquiry, and we are going to get to that too. Auditor must ask question, and which majority of the time people don't really like to be asked question, especially continuously. Sharing of information, especially complaints information, is another thing. And many organizations have their trade secrets and the like and are not ready to easily part with it. But by virtue of legality, auditor has access to every information that the organization possesses. So this is a dicey area, and is another disadvantage, disclosure of information to practitioner. Okay, now that we know what audit is, what assurance is, and the elements, let us move on to level of assurance that we could obtain. Levels of assurance that we could obtain when carry out audit and assurance services. Please note, it's only in audit that we can have reasonable level of assurance or high level of assurance. Reasonable level of assurance or high level of assurance can be achieved only by audit engagement. Assurance services, the best we could have will be limited level of assurance. Please, we should not forget that. And the reason is this: audit is methodical, is procedural, is regulated. And because of all this in audit work, gives it a leverage to have high level of assurance. But for assurance services in which it is not regulated and highly dependent on the competence of the practitioner, the best we could have is limited or low level of assurance. Please note, in no case, whether in audit engagement or in assurance services, can we achieve absolute assurance. We cannot have absolute assurance. And somebody may ask, why is it that whether in audit or in assurance services, we could not achieve absolute level of assurance? And this may be an examinable question. Basically, one of the fundamental reasons is this: audit, as thorough as it is, I said before, it's methodical, it follows processes, logic, is procedural. But even with that, it dwells on sampling. That is, majority of the time, auditors don't carry out 100% vouching, 100% verification, and the like. And because we do not do this oftentimes, how can we achieve absolute when absolute work is not being carried out? So this is one of the fundamental reasons we could not achieve absolute assurance. And we equally know that absolute is outside this world. Okay, yeah. Let's quickly touch on classes or types of audit. Classes or types of audit. We will move on to some types of assurance related services soon. Well, let's quickly dwell on types of audits and classes. Basically, it could be classified into two: by nature and by method of approach. And by nature, it could be statutory and it could be private, even though I put internal audit there. But internal audit can be in between the two, whether by method or by nature. Okay, so statutorily, the public interest organization are the ones that are mandated to audit, like the PSC of this world in Nigeria. Every other organization, they are going to fall under the category of private audit. So, therefore, if an organization is not mandated by law to audit or present audited financials, it falls under private. But if they are mandated statutorily, it becomes a statutory audit. So the second classification is by method of approach, that is in which auditor executes the assignment. It could be by final audit, it could be by interim audit. A practitioner could approach audits by continuous audit, procedural audit, balance sheet audit, management audit. Okay. What is final audit? It simply means audit carried out at the year end. Final audit simply means audit carried out at year end. And majority of the time, we do see our auditor come around our organization, probably at the beginning of the year, to carry out last year's audit. Interim audit is an audit that is segmented, divided into portions of the year. It could be biannual, quarterly, semi-annual, monthly, and like. Those are interim audits. Like, for example, the banking industry, they must give, I think, quarterly reports and the like. So they must have interim audit done to validate the financial quarterly. Continuous audit. Continuous audit simply means audits non-stop. Audit that is rolling, a rolling audit. And this word is already gravitating towards continuous audit. We can equally say it's a real-time audit. So the word is gravitating towards continuous audit, that is non-stop audit. Now, real-time audit, as transactions are being carried out, verification and the like are also being laid upon it. Procedural audit. This is a process audit. Please don't forget, this is a process audit. Procedural audit follows a particular process from the beginning to the end and verify that it is accurately conducted. That is, the transaction is accurately conducted as the process has been laid down by the management. That is procedural audit. Balance sheet audit is not that common. It's the rarest of all the methods, simply because it carries the highest auditor's liability. Balance sheet audit is a situation in which we carry in our hands the statement of financial position and only audit based on the figures on the statement of financial position, as we call it now. Management audit, last but not the least among them listed here. Management audit is a very broad audit. It's a very broad audit in the sense that it examines every aspect of the organizational life or operations. So it deals with the HR audit, financial audit, procurement audit, deals with IT audit, anything that is going on within the organization as a unit must be examined. And this is a very broad audit assignment. It could equally fall under consulting engagement. The advantage of all these types, whether by nature or by approach, some are similar, some vary depending on what we are talking about. We are talking about the final audit now. Is easy to execute, to plan and conduct, because auditor just need to come once and for all. So it minimizes costs, inconvenience of staff and the like. Of course, the merit of it is, apart from the fee, delay may be there in finalizing the audit and the regulator deadline may not be met, because that means we have to wait until the year end before we start to do the 12 months work. So, and if auditor will not be able to finish on time and meet the deadline, so the consequence may be penalty from the regulator. Interim audit, that one too is very good. So interim audit can help us to quickly meet the deadline because it's already partitioned, and that means at the end of the year 3/4 will have been done. We are only waiting for the last leg of the year, which is easier to audit than the 12 months. So it speeds up the final audit. Publication of interim audits like the banking industry quarterly financial release is made possible. It keeps company staff in check too, because they know that auditor is going to come soon and the like. It is time consuming. That is one of the major disadvantages of interim audit. Continuous audit, it has its advantage. Errors are easily detected fast. It makes equally final audit easier because audit is being laid upon the transaction. So it's easier to finalize because a lot had been done during the year. That's if continuous audit is merged together alongside with the final audit. The disadvantage: figures may be altered fraudulently, and this is because they know that, okay, auditor has come and worked on this and had gone, Meanwhile, the transaction still continues. So somebody can go back to what auditor has done and quickly alter it. Meanwhile, auditor has moved on to the current transaction because it's continuous. And there are a lot of check and balances, especially when it comes to IT, that could be done on this. But this one will be studied in later chapter. Okay, balance sheet audit has its own advantage too, because it's faster to execute. Balance sheet audit is faster to execute. We don't need to go through the ledgers, trial balance, and the like checker. We are only auditing the statement of financial position. And the demerit, especially on the part of the practitioner, is it carries heavy duty liability. Heavy duty liability. Okay, let's move on now to some of the assurance engagement services. Okay, yeah, here we are. Audit-related services including engagements such as data review, agreed upon procedure, and compilation. And we will dwell here now. When we are talking about review, it simply means somebody had done something and we are to take a second look at it, right? Okay, so it's an assurance service. Review is an assurance service, and like when we started, in assurance service, the best assurance we can give is limited assurance, low-level assurance, or what we can equally call negative assurance. Example of assurance engagement, review engagement rather. Let us say as a practitioner, we were called upon to review HR policy. So this is a review engagement, and is highly dependent on the experience of the practitioner. It's highly dependent on the experience of the practitioner. And in review engagement, we can have attestation engagement and direct reporting. If you remember when we started, I was like, we are going to get to an exception. And this is the exception I was talking about. In attestation engagement, auditor or practitioner is engaged or called upon to affirm, just as the word said, to affirm and put a reliability on a subject matter. But when it comes to direct reporting engagement, the auditor is under the agreement to expressly state his or her opinion. Should I come slowly? In direct reporting engagement, even though it's an assurance services, and if you remember, I said only in audit we must express our opinion in writing. But this is the exception to the rule when it comes to direct reporting engagement under review, under assurance services. We are to give our opinion in writing. Please don't forget. And that is the exception to that rule. Due diligence. Due diligence, when we are talking about due diligence, is another review work. And this does not require, like audit testing and the like. It's an assurance services, but is an environment for highly skilled practitioners. And due diligence is usually used when there is a merger and acquisition, management buyouts, and things like that. That is why we have due diligence being used. Due diligence work does not require test of control, like I said, but is an investigative review in which we need to go in detail and examine the assets and the liability of the intended party to be purchased. So the prospects will be thoroughly examined by the practitioner and feed the intended party that wants to buy with relevant information as regards their observation on the field. Like we will all agree, anybody that wants to sell will like to hide the liability. Therefore, it is wisdom on the part of the buyer to dig very deep into the matter before they buy. Sellers will always hide liability and buyers will always want to buy assets. So we must be able to match the two so that we will know what purchase consideration to put on the transaction. Items to investigate in due diligence. Of course, the financial position of the organization we want to buy, their operational issues must be looked at. So in their industry, what are the products or inputs that are not easily accessible? Can the business model be scaled upon? Is it scalable and the like? All those things must be looked at. We must look at management representation. That is relevant information that we would like them to put in writing must be obtained. Identification of assets, it could be scattered everywhere. We need to ensure that, okay, they are actually in existence. So in a case like this, we are not talking about observation. We are talking about inspection. We are talking about inspection, asset verification, and the like. Okay, last but not the least, let's talk about agreed upon procedure. Agreed upon procedure. This is audit in reverse. That is, it will define what audit is. The reverse of that definition will be agreed upon. So agreed upon procedures, simply put, is a review service in which the auditor or the practitioner rather is called upon to do a certain things as the organization wants it or as the management wants it done. You know, in audit is regulated. There is standard for our performance to be followed. So in audit, auditor dictates the team what to be done and the like. But when it comes to agreed upon procedure, the reverse is the case, in which the client will be telling us this and this are what I want you to examine, and please get back to us about your observation. So we are not in this regard saying this is how we are going to go about our work. The client that engaged us will be telling us this and this are what you should do. An agreed upon exercise is usually carried on in a matter in which the management or anybody engaging us have a very broader knowledge about what probably had happened or what they want us to work upon and review for them. But somehow, for reasons best known to them, they are engaging us to do the work. That is agreed upon procedure. Let's quickly dwell on compilation engagement or compilation services. So this is another form of assurance engagement in which all we need to do is to compile relevant information for the use of our clients. And tax is an example of compilation. From the word compile, it simply means putting relevant things together in one place for suitable use. So, in tax, what we do is to identify what will be allowed, what will be disallowed, what does the law say in this regards, and I apply all those things to arrive at the tax liability and the like. The financials must have been prepared, but we are isolating some items on the financials for tax purposes. So when we do that, that is, take some relevant information, put them together in one place for a purposeful use, we are compiling something, and that is compilation services or compilation engagement. Let me quickly touch on engagement letter, then we wrap it up from. Though we are going to study this more elaborately, but just as is here, let's just talk about it. So engagement letter is a letter that auditor gives to summarize their understanding of the work that we are being called upon to carry out. So when the clients call us and are satisfied with everything from the onset, they will give us an appointment letter for that purpose. So I will return by giving them the engagement letter for the service. So by the time we meet again, we'll continue on chapter or our module. Then we'll be talking about the regulated or regulatory environment. We'll be talking about regulatory environment and the like. This is Gbenga Olatunji signing off from G. James Associates. We are value to life, we are value to your business. If you've not subscribed, please go and subscribe to us. And a quick recap of what we've discussed. We've discussed about the meaning of assurance, the meaning of audit, types of audit, types of assurance services. We've discussed about parties to assurance engagement. We've spoken about the person that is engaging us, the practitioner itself, and the end user of our information that make up a party. Then the subject matter, suitable criteria, evidence, and reports. The advantages and the disadvantages have been spoken concerning. Other audit-related services, we've discussed it. Direct reporting, due diligence, compilation, review of data have been discussed, and we cap it by what is engagement letter. So, Gbenga Olatunji, I see you next time.